So the following amounts appeared on Plymouth Electronics adjusted trial balance as of December 31st, 2017. They had a trial balance here. Now these have been adjusted so we can prepare our financial statements. So we don't have to do the adjusting entries. Prepare a 2017 classified multi-step income statement for Plymouth Electronics. And then we're going to prepare a single-step income statement. So what is the easiest way to get a mark on your exam? Yeah, put a title down. So we've got So yeah, it says this is the trial balance was December 31st, 2017. And it asks for a 2017 classified multi-step income statement for Plymouth Electronics. So in this case, in the past we used revenues. Now this is a merchandising company, so this is a company that does sales. It doesn't do services. So what we're going to do is start with our sales. Our sales, according to our balance, $942,000. And definitely pay attention to the columns we use. The columns will matter. So the left column is your addition column, and this is your total column. So our first thing is sales. Then we're going to less our contra revenue accounts. What is the first contra revenue account? Sales discounts. And what is the second one? Sales returns and allowances. So the difference between these two contra revenue accounts, this is when someone takes advantage of our discount terms, 110 or 215, whatever it might be. This would be when somebody returns product. So discount terms is the first one, sales discounts, sales returns is when someone returns products. So you should have used both contra revenue accounts in the last example. So our sales discounts is $14,580. Now you'll see it's a debit balance, right? Because it's opposite of a revenue account. And our returns and allowances is, so if it's a debit balance and it's a contra, that means we're going to less it. So when we add this up, so again, here we have our subtotal column, here we have our total column. So make sure you're using your columns correctly. We get our net sales. So there's one expense that we are going to take from this immediately, and then we'll go through the other expense. Can anyone guess what the first expense is in a multi-step income statement? It's going to be our cost of goods sold. Why are we taking our cost of goods sold immediately? Yeah, what we want to see is what's called our gross profit or contribution margin. Yeah. So we can see what's left over after we sell. We want to see how much money we make from our inventory, and then we can take a look at our other expenses. And that total is $719,000. So gross profit from sales, it can also be called contribution margin. Either one is fine. So we can take our net sales, we less our cost of goods, and we get our gross profit from sales. Now we need to go through our expenses. So we have two types of expenses in a classified balance sheet. We have, so they are our operating expenses. So they're called not just, we don't just use expenses because that would include cost of goods sold. Our operating expenses is expenses from operation, so not from merchandise. There's two types of operating expenses. We have selling expenses and we have general and administrative expenses. So you'll see here in the example that they've split it up for us to include rent expense for the selling space, which would be like a showroom, and rent expense for office space, which would be the back end. So we have different expenses, some for selling, some for office. Depreciation for store equipment and depreciation for office equipment. So they've broken it down for us, which is what you'll see on your midterm and your final. And the first one we'll take is our selling expenses. Now there are 4 selling expenses here. You want to take a look and yell them out when you see them? Sales salaries expense. Rent expense. Selling space. Depreciation expense, store equipment.
Store supplies expense.
And store supplies expense. We can get our total selling expenses. So when we add these up, comes to 122,730. So again, you can always just put the sum to the right of it, that's fine, or you can use this. So our second operating expense is what? General and administrative. So we have office salaries expense. So you will have to know these two sections, right? These two classifications. What other? Office supplies expense. There's two more. Depreciation expense, office equipment. And there's one more expense there. Maybe you don't realize it's office. Yeah, there you go. When we add all these up, so we get our income from operations. And so what is 202 less these two amounts? You can put these in brackets if you like. $13,590. Now there is one other section that we need to do. It's called other revenue. Other revenues and expenses. Now other revenue and expenses. So if Plymouth is an electronics store, on this trial balance, do you see something that is either an income or an expense that has nothing to do with selling electronics? Interest income. So if someone were to buy the store, would they get, would they have the cash that's collecting income from some sort of loan or some sort of savings plan? They wouldn't. So we wouldn't include interest income in the classified multi-step income statement because it doesn't actually have anything to do with selling electronics. So you like to think of it like if it's core business, if it's not part of the core business, it should be not included in the regular operational income statement. So we include it under other revenues and expenses. So this would include interest income, interest expense, right? Because yes, every business that takes out a loan has an interest expense, but if somebody else were to buy it, their interest expense would be different, right? They would have different set of loans, so it has nothing to do with the operations. So we include it under other revenues and expenses. So in this case, we have interest income. For $720. And we get a net profit. $14,310. Now we can do our single step income statement. So the next page here. Just getting yourselves a quick mark by putting in the title. So in a single step income statement, we list all of our revenues. This is more similar to what we did before. And we list the subtotals. So in this case, we'll just list our net sales. We don't include another section. We actually include just all of our revenues at the beginning, but we still keep them separate. We get our total revenues, and then we can do our expenses. Now there's 3 subtotals for expenses. What were they called? First one was our cost of goods sold. And if you're asked to do this, the easiest thing is to take a look and see which ones we put on our subtotal. So our total general and administrative, total selling, and our cost of goods sold. So cost of goods sold, selling, expenses, general and administrative expenses. And so cost of goods sold was $719,000. $122,730 for selling. $66,385 for total general and administrative. And we get our net income.